Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed but mostly weaker markets around the world today as the yen continues to strengthen and the dollar continues to fall. In Europe, the DAX is down over 1.5%. In Asia, the Hang Seng is also down around 1.8%. It seems like we're getting a bit of a headwind from overseas here.
Yes, I woke up this morning, I'm like, what are the futures doing? Let me look overseas, and all of a sudden I saw bad economic numbers out of Europe, same thing out of China, so I'm like, we could be getting some wind in our face today, and then, like you said, lots of markets broadly lower. So, if you take a look at the Hang Seng, it's been in a downtrend and it's been broken. At times it's helpful, at times it's a headwind, and I guess today, it has a little bit more weakness. If you look here at the FXI, you'll see, still never able to take out the 200-day, which is kind of crazy considering that most markets around the world did. Okay, now the question is, does real weakness settle in, and does this, ascending channel from the lows break to the downside? So, we'll see what happens here. If you take a closer look at the levels here of the FXI, you'll see that here is some pretty big support going sideways. If this were to break, okay, the headwinds here will blow a little bit harder. This is 33.31. That's your support in the FXI. If you look at the EWG, which is a proxy for Germany, which has been acting a little bit better, you can look at this, the differences in the charts. You'll see here that Europe actually got back above the 200-day, but you have to get above it and stay above it. So at this point, you take a closer look here at the EWG, and we'll see whether or not, okay, this support that held last week stays strong. This is like 26.14. If we get a close below this area, then all of a sudden, boom, the 200-day that will now try and be support will be watched, and a close below that, and the headwinds will start out of Europe again. I'm starting to hear some clamoring about Italian banks again and Greek banks again, and we'll see if that clamoring gets a little bit louder.
S&P futures are down 14 to 16 handles, which is a sneaky move since markets closed on a high yesterday. It's good that you pointed it out, the 2081 grudge match area for both the bulls and the bears.
Yes, because we're in this little bit of a back and forth area where the market's trying to figure out if it's going to correct, and we talked about those ascending channels. And last week, the SPX broke the ascending channel, okay, but went as low as 2,052. So, we were in the midst of a bit of an oversold bounce from Friday's low to yesterday. But they did make it very sneaky considering that they brought us right back to retest that area. So if you weren't in many longs because you reduced risk because the action got a little faulty, you were probably like, oh, maybe I need to be in some longs, some things are acting well. And if you started shorting a little bit early on Friday or even yesterday, who knows if you took it overnight. So the computers are getting really good at making you question whichever side you're on the market. But overall, if you look at the chart of the SPX, you will see that, we talked about this, ascending channel that broke last week, okay, and that was right here, right around this 2080. So yesterday went right back to it. So you really had to have some conviction to go out short, considering we closed, somewhat well. I was hoping we'd get a little gap up to maybe short, and get out of some longs. But anyway, we'll see what happens. At this point, here is Friday's support. Friday's support. Let me make this a little bit bigger for everyone that's a little older like me that has some, reading, focusing problems. But anyway, here is, this is 2052, and then yesterday's low is, 2066. So let's see first, do the sellers have enough power to get us below 2066 and keep it below? And then you have to, kind of worry about this spot, or do we hold this and come off our lows and continue to consolidate? Overall, though, this new resistance line held, and the right side of this ascending channel is now going to get stronger. So we'll see what happens here. Overall, though, it was on light volume yesterday. I know a lot of people were pointing that out, but we've had a lot of light volume within this entire chart. But I guess, if you did play the bounce and you reduced a little bit, okay. If you got short into the close yesterday, you did even better. I think Cooper had an unbelievable call because he started shorting yesterday, added on the close, and he said, this bull trap's not going to fool me.
As Scott just mentioned, an oversold bounce. We also saw that in tech yesterday, but that's all it might have been. What are some levels to watch here in the Qs?
Yesterday I was watching tech because I was like, you know what, if we're going to get back to 2080, maybe Qs could at least get over Friday's high. And it did it, and it gave some a nice trade. And, unfortunately, if you're looking for a little bit more, you're going to be a little bit underwater today. So it's either, it gets its footing and tries to reverse a little bit higher, or all of a sudden the cues continue to be weak and you better, salvage your trade, take a little bit of a loss and move on. If you look here at the chart, overall, it's still, very weak. Okay, here, starting from this area, this ascending channel broke. That's when the 8-day broke. That's when your upper support broke. And then, you had this level break and get retested last Thursday, and then all of a sudden, finally on Friday, you had a little bit of a bounce. So I was thinking, oh, you know what? Maybe we'll get a methodical bounce back into the moving averages and we could short there. Well, guess not. We'll see what happens now on the open. On the open, you'll see if this this level holds, which is 105.55. If it does and comes off of it, maybe there's still a chance of a little bit more of a retracement. If it takes this out and heads back to Friday's low, it's going to be hard for the broader indices to bounce at all.
The banks showed relative strength yesterday, but are mostly weaker overseas. What level would you put some stops in if you happen to be long some of those recent names?
I think that's a good thing to suggest, because stops are key, especially at upper areas. And when I looked in all my notes overseas, it says like Italian banks under pressure, Greek banks under pressure. In Asia, they also didn't have great numbers. So maybe we are the best spot to be for the banks, but still, this has been a laggard group having a counter trend move, so you want to be a little careful that you're not the last one sitting there. So let's just go quickly through some levels that if you are long, you should get out if you get a close below. So on the XLF, this is your line in the sand. So we'll go quick. Line in the sand in the XLF, 23.10. We break and close below that, get out of the way. Goldman Sachs acted pretty well yesterday, but still below the 200-day. It's trying to flag. I would say if you're in Goldman Sachs, this is your support line to trade against. That's 162.56. For some reason, if it happens to go green and continues, that would be pretty impressive. But here is your support to trade against. JP Morgan, which has been the leader, that's already above the 200-day, trying to go sideways. Remember this gap and go right here that ignited the move? Well, this is your spot to trade against in JP Morgan. If you're long this stock, I would say be long versus 62.70. And at some point, if the market happened to get better, I don't know, it's trying to flag, but we'll see if that's a bull trap as well. So that is your support there. I'll give you one more support zone. Some of you guys actually, do trade this Bank of America, which gave a decent move when it cleared this little, ascending channel here or triangle and gave you a nice gap. Well, at this point, it's going to have to hold this spot in order to stay somewhat constructive. So if you're in Bank of America, which is still below the 200-day, I would use this 1440 as your stop.
In a sea of red, traders often look for stocks that have showed relative strength. Looking to high beta tech, going from red to green, what's worth to take a look at for this active cash flow?
Well, when you get a move that you're really not expecting, then I say active cash flow means you get continuation or you get a Q trade. Which actually, I wouldn't even say this is a Q trade, because some of these things have acted well, like Amazon. Amazon gapped up after earnings and then gave good follow through yesterday. So I'm sure there are some traders long it overnight for follow through. So if you didn't take Amazon long when it closed on the highs, down $5, you're getting a little cheaper than the guy that took it home long. So if it's any good, though, it should try and go green and get a push. So if you're flat Amazon, you know what? Look at it down $5, $6, and maybe it goes green and gets continued strength and then gets a push. If you're in it overnight, hopefully, you know what? Some support comes in and it gives you a way out, and maybe you add to it, because you should never have too much overnight or more than you had intraday. So anyway, you look at Amazon, here is the chart. So here is the gap from earnings. And then yesterday it opened up below the post-earnings high and gave you a nice trade. So I would say at this point, if you're looking to have a stop, this needs to hold right here, which is 670. I would think maybe even it holds higher. So if it could hold above, just say, I'll go a little bit more granular, because I think a lot of guys are trading this. Here's your 5-minute chart. So basically, I would think that if the market kind of wants to make it easy for you, or for guys who are trying to buy a dip, I would say it doesn't come down to here. It holds 675. If it could hold 675 and try and go green, maybe you even get a push, above yesterday's high. But if Amazon can't go green today, in a sea of red, it's going to be hard for the market to pull off the lows. I'm actually in Facebook. Similar setup. You had this big gap up after earnings, which it's been holding. It's been not as strong, obviously, as Amazon. It's down $1 pre-market. So I would say maybe try and be a buyer versus this 1650, and if you're in it from this red dog reversal from Friday, then just give it all the way down to 1584. I'm hoping that it doesn't open down $1 and go down 2 and stop us all out. It'd be nice if it goes down $1, holds in there, tries to go green, and then maybe, it even tries out to take out yesterday's high, which is 118.73. So I would look at, Facebook and Amazon as they had the best earnings, and then one other one, which is a little bit of a laggard, but Netflix did close on highs yesterday. It did put in a reversal bar here, and we talked about it clearing this for a trade. So with it down $1 or so, maybe there's a small trade for it to go green and push above yesterday's high of 93.20. I'm not in this one, but I'll take a look to see if we get some kind of divergence. But be careful. It's still in the penalty box from earnings like a lot of other names out there, but perhaps there's a little bit of a push left.
We usually see a similar strategy in the mega cap sector. Are there any names that interest you here, and perhaps Apple after Tim Cook's Mad Money?
I tried to be cute and take a little Apple long into the end of the day. It acted a little well. It held 92.5, and then all of a sudden we heard the news that he's going to be on Mad Money. So I figured, maybe it's worth a trade, but obviously nothing's that easy. So it's only down like 30, 40 cents. So I will look to see if I could add to Apple to see if this 2-day support, winds up holding. So here's your 2-day support. Here is a little resistance. If it could continue to hold above that, maybe there's a little bit of a cash flow trade. If it could take out this, 94.72 spot. Or actually, first, yesterday's high is 94.08. Then you have 94.72. If it does it, maybe you get a cute trade to 96. But if it can't go green today and goes down after Tim Cook went on, Mad Money and put himself out there with Jim Cramer, I think, fickle buyers are going to sell, and then this macro pattern here, which, is pretty scary for tech and pretty scary for Apple, where you have this major support here, going across. If it were to break that, your next spot doesn't come in until, the high 80s, and then really, major support doesn't happen until, the lower 80s. So it's got to get away from this danger zone. Like Apple right now is in the danger zone. So hopefully Tim Cook spoke to whoever it is that runs his buyback machine and says, don't make me look bad, guys. I went out there on a limb. Let's try and get a little bit of a rally today, and that's what I'm trying to catch there. Other than that, I don't think there's anything so great. Microsoft is pretty broken, but it just gave you a 2-day move here. So maybe it'll be lower with the futures, and it tries to go green again. So buy versus a 15, 30-minute low, but I would take care here. This also still has a big earnings gap, and right now all it is just a lower level trade.
Yesterday, metals took a breather, and so did the miners. Scott, how did you manage your positions? I think you said that you were going to sell the GLD and then create a call spread with your options. Is that right?
That's exactly right.
Yeah.
And after a big move that we saw that started midweek last week, it made sense. The GLD, that was a great technical trade above 120. I figured, what, on day 4 I'm going to sell it right around 124. But I think there's a little bit more, fuel in the tank for gold to continue, but it could be choppy. So I'm like, let me create a call spread. So those in the VTF know I think I bought the GLD 120s for like $1.80, and then I sold the 124s for $2. So that means it's a free trade. If gold gets crushed, it doesn't matter. But if gold goes to the measured move of 126, 127, I'll make $6 on what I spent 0 for, actually. That's a pretty nice move. But anyway, let's just talk about the GLD. If you look here, it's had a big move. The reason why I sold the GLD itself is because look at where the 8 and the 21 day is. So I thought it was a little extended. It is up a bit pre-market because of the weakness in the in the overall indices. So here is your upper level support, and maybe it doesn't rest long. If you're shorted, take care. If it gets above this 123.96, you can get some more upside. Let's take a quick look at the weekly chart. Weekly chart, nice bull flag. That's why I had conviction to buy the actual options when it didn't even trigger yet. Here's your descending channel here. It broke above. Nice sideways action on the weekly. You can take a picture of that. And now it's got the 200-day at 125.32, which will be your next obstacle there. But could even get a little bit higher than that. If you go back to the daily, the metals or the miners have actually been leading the way. The GDX, what a move. Okay, actually yesterday I made some money on the short side of NUGT. I'll get into that in a second. It was in my focus section of my note. So here's when it broke out. Here's your follow through. So yesterday opening up was not your spot to chase. So now at this point, here's your point of reference, and I would think that it would hold in here a little bit and go sideways, but I've seen crazier things during a parabolic type move. But anyway, here's resistance. 26.17, it gets above that, it continues. I would think that, you know, it tries to hang around a little bit more. And like I said yesterday, you know, I talked about maybe fading the nugget. It's had a huge move, and I think a lot of guys made some good money when it went back below Friday's high of 119.18. You could have been short versus 123, 4 points, and, you know, made yourself a decent amount of money depending on where you covered. So now we'll see, you know, what's next here, but I would think some time.
Oil is looking lower again today, giving it some downside follow-through. Do you think, or what level should I say, do you think that the USO should hold? And does the XLE interest you yet?
You know, oil went from 25 to 45 and change, so everyone yesterday was like, oh, oil's down and the market doesn't care because, again, that's a big move. But you know, I would think psychologically, you know, that there is support at 42, but if it started to get below 40, then the market, it would become maybe a headwind again. But I'm not sure if that happens. You look here at the USO and you will see that, you know, you had, you know, 2 down days. Remember on Friday it opened up, and right now what it's doing is it's testing, you know, the 8-day level. So the 8-day has been pretty much support for almost 2 weeks. So if it gets below this 1095 and stays below, your next spot is the 21-day. And the 21-day, I think, would be a good spot to look if you wanted to get some exposure. That's 1057. I know some guys in the chat were talking about being long DWTI, and they had a nice trade. You know, this thing's been annihilated. So for you guys, I think you said you're going to cover a little bit into the open, which makes sense. Let me just show it here. Wow. Because there is the 8-day here at 99. So you caught a nice little cute trade here. This was old support, which could be resistance. So on day 3, I would also trim some. But then, you know, if oil does decide to come down to the 21-day, you might even get a little bit more of a move towards this 108 to 112 spot as the 21-day moves down. So this was your oversold quick little bounce, but now we'll see if there's anything more there. And as far as you mentioned, if I'm interested in the XLE, not quite yet. I think that you know, you had a really nice move in the XLE. We've talked about it. I've charted it. I think the major chart I put on Twitter was right when it broke above here. You know, here was your double bottom after the Doho situation, and now I think you can get a buy probably a little bit closer to here. In order to get there, it's going to have to trade through this first, and this first is 66.47. So see if this holds. If this holds, probably be good for the broader indices. If it doesn't, I think that, you know, a buyable dip could happen a little bit closer to 65. So those are my thoughts there.
Okay. And as the tape gets a little more choppy, what are some tips that you give traders to stay safe and profitable?
Well, some people will stop taking overnights because when you get a misdirectional move, kind of like yesterday, where you close sort of strong and you have some decent acting stocks, and then boom, you get blasted 15 handles, it's a little bit of a trap and hard to deal with. So if that's the case, you know, take less overnights because there's enough intraday action in sectors and names that you can make your cash flow. You know, or if you have 2 accounts, like I have a swing account and an active account, I make sure of it now that you know, one of them's flat, just in case something like last night happened. So like I went out in my active account, you know, which, you know, Facebook and what else? Facebook and Apple. So in my other account, I'll say, you know what, Facebook's down $1. You know, let me try a little bit here, take the pain of one account and the other account, and then if Facebook goes flat, I'll just get even in my active account, but I'll make money in my other account. And I should have had them in my swing versus my active. But anyway, that's what I mean when you have 2 accounts. And then with Apple, I think it's only down 20 cents, so there's not a hell of a lot to do there. So that's why you have 2 accounts. So this way, if you do the right trade in one account and you get a, you know, a curveball thrown at you, maybe you could take advantage of the opportunity in the other account. But then if, you know, it doesn't work out, you got to, you know, have your stops in there and make sure, you know, you lose less and just manage the trade based on what the market's doing versus what you thought. And as far as, you know, the spiders, we'll just quickly show you the chart there. You know, I'm not sure. The market's come a long way. You know, unfortunately, we didn't get, you know, well, you did get it, but, you know, I was hoping to get like some kind of red dog reversal around yesterday's high to short, because I was also looking at short. I just didn't put it on. But anyway, now we'll see what happens here. Yesterday's low in the spiders is 206.41. We'll see if it could hold. If it could hold, you know, then maybe it puts in an inside day and then gives you another chance for this to be broken to the upside. But if it falls below this, you know, your next point of reference is Friday's low, and then, you know, real big support, which I don't think we get much. I don't think we get below this, you know. But you know, that's my thoughts. I think that, you know, we hold this at least for another day or two before they say game over, and then this 203.53 is really big. So, you know, we've had some faulty signals through earnings. Lots of generals lost their badge, and there's been a two-way trade. So at this point, when there's some misdirection and choppiness, size down and less overnights.
Good advice. Thank you. Have a great trading day, everyone.